A new study of living standards shows that millions of poor Kenyans defied the strong economic headwinds of the 2008-2009 fiscal year to increase their purchasing power and climb the social ladder. Joining us now from Nairobi on how Kenya has begun to increase its middle class is Joe Otin, Media Research and Monitoring Director at Synovate. Joe, thank you very much for joining us on the program.
You're welcome, Lerato. It's a pleasure to be here.
Okay, thank you. So tell us, what's the status of the middle class, as it were, in Kenya? Because some reports suggest that with inflation rising, with some of the economic challenges that the country's faced, there's been a reversal in terms of the growth of the middle class.
Well, Lerato, I think the first thing to say is Kenya is urbanizing. And we have seen Kenya urbanizing over the last 12 years or so. In 1999, when the census, the National Population and Housing Census data was released, we found that there was 24% of Kenyans living in urban areas. And in 2009, when the same data was, when the same survey was carried out, we found that it was about 36% living in urban areas. Now, from the studies that we carry out in media research across the continent, we use a measure called the living standard measure, which is an aggregate of household goods owned and an aggregate of what is owned and consumed to give a level of affluence of consumers. And what we found from this data is that Kenyans are actually becoming more affluent. Now, you will see that from the lowest levels of affluence, that those numbers are dropping. So the people at the lowest level of affluence are fewer and fewer than they were two or 3 years ago. And those on the middle level are actually higher. So we are seeing Kenya moving to a higher level of affluence.
And how will this affluence be impacted by the current inflationary trends? I mean, inflation ticking up 14.4%, prices rising. Their wages are not going particularly far.
No, well, you see, that's the thing, and that's the challenge I think that we face here in Africa. With inflation that moves from 4% 1 year ago, 14% now, how are employers supposed to deal with that? I remember when I was speaking to some foreigners once, and I told them that our inflation rate was in the double digits. They asked me whether we were receiving pay increases to deal with that, and obviously in Africa that's not the case. So it appears that people generally have to deal with those vagaries. But in relation to what we've just been talking about, we've been seeing about 5% growth. We've been seeing this consistently. So they are richer, even though they have to deal with the more short-term effects of inflation, as it were.
Let's define the middle class, because obviously you're tracking a living standards index. But some would say, truthfully speaking, the middle class have to be people who own an asset such as a property. There's a certain level of education they must have, and then those consumption patterns you refer to. Does that translate as the same thing in Kenya? Well,
it generally does, because once we've looked at these consumption patterns and these ownership patterns, we then define these target groups, or these consumer markets. And one of the things that we see is that it does follow that certain LSMs, or the higher LSMs, generally tend to be higher educated, earning more money, and owning more property than, say, those middle classes and the lower income groups. And of course, some of the challenges or the changes are between our market and, say, the more developed markets, is that if those people who are living under $1 a day, they usually tend to have ancestral land. They're growing their own crops, growing their own food, and that kind of thing. So the money is not necessarily translated into their actual standard of living.
Fair enough.
So what we're seeing from the middle class is that the middle class in Kenya tends to be educated up to say university level, diploma level. They tend to be working in jobs, a lot of them in urban areas, and they also tend, on the lower end of the scale, they tend to be the younger workers, who are generally looking to become more affluent as they grow in their careers.
Let's underscore the term younger worker and also urbanization that you refer to in this conversation. Apparently 70% of people employed in Kenya actually live in slums. So yes, they are in the city, but they are not living in the most ideal conditions in the city. We also know that Kenya, like South Africa and Nigeria, is faced with a huge burden of youth unemployment. So when we start talking about the middle class and we juxtapose it to some of these social realities, how does Kenya really fare?
Well, I think we are seeing ourselves as a developing, a developing nation, or we're looking at ourselves as a, developing nation, and we are seeing the numbers improving over time. Africa generally tends to have a very high bottom of, or very large bottom of the pyramid. We see that in Kenya. We see that in other markets like Uganda, Tanzania, Ghana, Zambia, Mozambique, and other markets where we carry out our studies. Generally very large bottom of the pyramid. But over time, we've been able to see a real change, or we've been able to see a significant change towards a larger or a growing middle class. Currently, the middle class is smaller, and if you look at the upper income, or even the highest level of affluence, generally less than 1%. Right, and then you look at the bottom of the pyramid, and that goes up to 40%, right. Up to 40%.
Let's talk about the positives, and very briefly. Obviously, a lot of international retailers want to spread their wings in Africa to tap into the so-called growing middle class, growing consumer class. How aspirational is the Kenyan middle class, whatever the range of their earnings? What sort of things are they wanting and looking for?
Well, one of the things that's tended to change in the Kenyan landscape is that the informal sector is being really challenged by a more formal, say, supermarket culture. And we are seeing supermarkets rising up across the country for various groups, some that are targeting more of the higher income groups, some that are targeting the middle and the lower income groups. We are also seeing a growth of media, tremendous growth of media. And for example, last year, advertising exposure grew by about 57%. This is really a reflection of companies that are targeting the aspirational and the growing middle class and the growing incomes in the country. So we are seeing a more, should I say, sophisticated, a more urbanized type of media selection, availability of a lot of media, and they seem to be watching a lot of interesting content. Okay. There is international content, local content, and including local dramas. Right. We're seeing soap operas and and news content, of course. Okay. So we are seeing a little bit of a sophistication of the Kenyan consumer, and we are also seeing quite a number of companies coming in to target those consumers.